In from Mahantesh Sabarad on how he's reading the markets right now. Mahantesh, good to have you on the show. We've seen a slew of numbers come through. Let me start off with your own sense on how you'll be mapping the big earnings so far and what has stood out to your mind.
So the earnings that we have seen so far have not been materially significant in terms of surprises. We have had actually, I would say, more positive surprises than really negative surprises, and to that extent, therefore, I can say that the results have been good so far. The standout results would perhaps belong to the companies who are yet to announce results, because there are crucially such companies, the large public sector banks, for example, is one which who still have to announce results, to some of the Tata Group companies who have to announce results. But primarily, in terms of results that really stood out, I would reckon most of the IT companies have done well in terms of their results. Most of the large cap IT companies have really done well.
Yeah, they have. In fact, talking about results, Mahantesh, stay with us. Got to address one set. Ashok Kajaria, CMD at Kajaria Ceramics, joins in to talk about their earnings performance. Ashok, hi, afternoon. Cost pressures are clearly evident, but before we get to that, or rather the margins, tell us about how the volume growth has been in the quarter gone by.
See, the volume growth in the quarter 2 was 11%, and the first quarter was 9%. And going forward, we are looking at 14 to 5% in the second half.
Okay. And what was the response to your new premium launches like Kerovit? What was the sales mix like this time between the premium as well as the regular segment?
See, we had a big launch of ceramic tiles on sometime around first week of July, and a second launch of glazed vitrified tiles on 21st of July. Both have been positively received, and the response has been very, very positive. Especially the GST has been a positive instrument in the entire setup. The dealers who have made good showrooms, they are feeling very comfortable with GST. It's one tax, a simple tax, and I think they are very comfortable.
And that's heartening to hear. What is your broad outlook in terms of how the second half of this year will pan out?
You see, first half has already gone by. Second half, we are looking at about 14 to 15% volume growth, and an EBITDA which was 14.61% in the first quarter, 15% in the second quarter. We are looking at 16% plus in the second half.
Okay, which areas do you see?
And the sanitary ware and bath fittings volumes should grow at 40% this year.
Will margins continue to be under pressure? It's been about 3 months since the e-way bill has been implemented.
I can't hear you. Margins are under pressure because of the hike in the gas cost. See, first quarter we had an impact of almost 15 crores. Second quarter we had an impact of 20 crores as far as gas cost is concerned. We are trying to optimize our cost of production. We are trying to launch value-added tiles. I think that is what has made us work, and the numbers have been okay. But the gas costs have gone up significantly in the first 2 quarters, and will probably look like that for the next 2 quarters as well.
Post which you are hoping for a recovery, right?
Yeah. We are looking for a positive scenario going forward.
Okay, great to hear that. We'll leave it at that. Thank you so much for highlighting how your quarter has been and what is it that you hope to achieve in the next 2 quarters where the pain should lift. That's the word coming in from Kajaria Ceramics. But Mahantesh, on earnings, want you to analyze and give your bit on Maruti. We were just listening into the press conference and R.C. Bhargav saying that, rising interest rates, fuel prices are a cause of concern. He's also attributed the EBIT margin a dip this time around to rising commodity prices as well as adverse forex movement. Does it give you conviction really that Maruti will be able to sustain their margin as well as profitability and volume growth, more importantly, going forward? And can the stock see a meaningful recovery from these current levels?
So let me take your questions one by one. On the margin front, yes, we have seen pressure coming in for margins from rupee depreciation more than anything else. Commodity price increases is a common factor which is seen by all OEMs, all automakers, and the way they tackle that pressure is by way of price increase. But rupee depreciation effect is something which is a little unique to Maruti in the sense that their import content, both indirect as well as direct import content, is much higher than any of the peers. So they find it difficult to pass it on. So I guess so long as rupee remains beyond 70 rupees, margins will be under pressure for them. But the second part of your question was on volume growth. Since you have commodity cost push pressure and that's coming out in the form of price increases, you will have a trade-off with respect to volume. So I guess volumes in the months ahead will exhibit a decelerated kind of trend. Already the volumes are for Maruti exhibiting a decelerating kind of trend. So that trend will continue. And the last part of your question in terms of meaningful recovery in the stock price, I think it's still time because from a valuation perspective, even now, you have Maruti trading upwards of like 20-21 multiples on forward earnings. And in a situation where you will have decelerated volume growth, I guess the valuation should settle down lower than what we are currently seeing. So between the valuation settling down lower and the better EPS estimates that they will have in the years ahead, the trade-off is very clearly suggesting that the price can go down.
Okay. How are you approaching the investment rationale for IT, Mahantesh?
For information technology.
Yeah.
So clearly we, I think, were right when we were predicting way back in December that IT will outperform the markets, and which is what they have done. But now we have reached a stage where we are not seeing any meaningful guidance upgrades. So results have been good. Normally you should see any acceleration in earnings coming through better guidances that the management tend to give. So the only guidance which is coming out in terms of positivity is that the digital revenues are going up, but then you have all other negative commentary coming in. Pricing is under pressure, attrition is still a problem, H1B visa costs are going to shoot up, and so on and so forth. So I think from here in onwards, IT will not be a major performer. All the tailwinds that they had thus far, partly also coming from rupee depreciation, will now wane off and cool off, and that therefore I think IT as a sector will probably be a market performer, a slight underperformer as we go ahead.
Okay, Mahantesh, stay with us. Lots more.
Welcome back. You're still watching Closing Trades right here on ET Now. We're counting down to the market close, about 40 minutes to go for that. Yawning gap in the favor of declines, and the market breadth has been steadily negative all day long today. Mahantesh Sabarad is still with us. Mahantesh, how are you spotting opportunity in the financial sector among banks, NBFCs at large? And I'm not really talking about the consistent performers in the retail-oriented banks, but really looking at opportunity in the beaten down names.
So clearly this entire turmoil that we have seen in the NBFC space caused by certain defaults by ILFS and then later on getting compounded because of the liquidity crisis is surely going to help the banks in general, because the phenomenon thus far over the last 2-3 years was that the lending space was being ceded by the banks to the emerging NBFCs who were galloping ahead in terms of their dispersals. Now I think it's the time, the reverse is likely to happen. So banks will start gaining more lending power. As it is, they have a strong franchise network, and the strongest franchise is the network that among banks exists with the PSU banks. So as the deposits start growing, although I must admit that the deposit growth rate is at a low rate level now, but we should see a recovery happening with the rising interest rates now. So when deposits recover, lending will be at a much accelerated pace, and therefore most of the PSU banks will start doing well. And provided you have certain PCA-linked banks being eased, and that means the norms of the PCA are eased by RBI, we might see certain PSU banks actually doing far better in terms of their business growth ahead. If this scenario plays out as we are anticipating, then I wouldn't be surprised if the PSU banks will be an outperforming sector for the next year or so.
Okay, Mahantesh, let you go on that note. Thanks so much for taking the time out and discussing the market mood as well as individual stocks and sectors with us.